This is Capital Ideas TV. Coming up, the CEO of Engagement Labs, helping companies conquer social. XBLK Technologies founder on the path to meaningful revenue. Globex Mining CEO, making the case for an undervalued company. Hello and welcome to Capital Ideas TV. I'm Mark Bunting. Social media is all the rage within brand marketing circles these days, and why not? The audiences are massive, the demographics are favorable, and the costs are relatively low on social media. For a marketer, what's not to like about this graph from ComScore? This is a breakdown of audience penetration rates each major social media network holds among the 18 to 34 age group in the United States. The figures are from December 2015, so they're a bit dated, but still relevant. Now, Facebook is way out in front with roughly 98% penetration and more than 1,000 average monthly minutes per visitor. Instagram ranks highly on both counts, while Twitter and LinkedIn enjoy high penetration rates as well, and Snapchat does well on minutes per viewer. Naturally, most brands look at those eye-popping numbers and come to one conclusion, and that is that social media is where they need to be. And that's absolutely correct. It's important to have a social presence, but it's not quite that simple. This fascinating chart from iMode Digital paints the picture. The digital marketing consultancy surveyed more than 500 small and medium-sized enterprises on their digital marketing habits. Respondents spent by far the most time, as well as the most money, on social media marketing versus organic search and email marketing. That's here in the middle. Yet the sales they generated from those efforts were less than both of those alternatives. Organic search was by far the most effective tactic. But here's the most surprising stat of all. It comes courtesy of marketing blog Everything Technology Marketing. They've surveyed more than 200 B2B marketers and found that a whopping 45% use no metrics whatsoever to measure the effectiveness of their social media campaigns. And oddly enough, sales results were one of the least used metrics at just 18% or so. It's clear what is needed is a more sophisticated approach to marketing in the digital age, and that's where Engagement Labs comes in. The marketing technology company has run some numbers of its own and found that the optimal approach is a blend of old and new. Engagement Labs and 2 universities studied the correlations between consumer conversations and sales for more than 170 brands. They found that nearly 20% of purchases could be traced back to word-of-mouth conversations. On average, it was nearly a dead-even split between the impact of online and offline conversations across most business categories. The study suggests many brands may be misallocating millions of marketing dollars on social media when what's really needed is a more two-pronged approach. With this in mind, Engagement Labs developed Total Social. It's a marketing analytics platform that tracks online and offline brand sentiment. Not only that, it recommends marketing strategies and predicts how much sales will improve as a result. Here's Engagement Labs CEO Ed Keller to take us through the science behind Total Social. So Ed, full disclosure right off the top, I'm a shareholder in Engagement Labs. I bought in at 10 cents quite a while ago. It got down to 4 or 5. Now we're up around 16, so I'm fairly happy right now.
Good.
So when you started, you said we're going to have tens of contracts, and here we are about 18 months later. You've got about 4.2 million in contracts at last report, several Fortune 500 companies. So are you on pace? Are you where you thought you'd be when you started with the company?
Yeah, so I became CEO of Engagement Labs in the fall of 2016. My company, the Keller Group, had been acquired about a year earlier with the idea of building an integrated social data and analytics solution, and that's what we've done. We brought it to the marketplace in the fall of 2016, and I think we're right on pace for where we expected to be in that time period. You mentioned about $4+ million in sales so far. Actually, it's a little bit higher than that. At this point, we're more like 5.5 million, and I think we're gaining traction with a lot of blue chip Fortune 500 companies that are not only buying, but we've had some good renewals already. So I think we're in a very good place. We've also built a great team. I've just recruited and we've just brought on a new chief revenue officer to help us now build out a sales force and start to take advantage of the momentum that we have in order to ensure that we continue to move into a hyper-growth phase over the next year, 2, 3, and beyond.
And these Fortune 500 companies that you're dealing with, Ed, you're right across the spectrum in terms of the sectors that they're in.
Yeah, one of the things that's really exciting to us about Total Social is we're getting leading companies in a variety of sectors, whether it's in financial services, technology, telecom, retail, beauty. So we think we're not going to be locked into just one or two niches. There's companies across a wide variety of categories that are finding value in Total Social, and that represents a big commercial opportunity for us to pursue.
So Total Social is your main offering, and could you explain it, especially the offline part of it? I know that is your specialty. You've developed this offline sort of data analytics over the years, but how do you actually capture an offline conversation between two friends, for example, about a certain product?
Yeah, so let me just explain first. So Total Social is a data and analytics platform. It's the only data and analytics platform in the social ecosystem that integrates both what's being talked about online through social media and what's being talked about offline. And we built a predictive analytics component that helps our clients not just know what's being talked about in the past, but what impact it's going to have on their business in the future. And we're the only platform in our space that integrates online plus offline with predictive analytics. So that's the unique offer that we have, and that's why we think we have a huge opportunity in front of us. The social media comes from scraping the Twitters and blogs, forums, and the likes, and then we have a proprietary way that we kind of score that data. So we've got some secret sauce there, but our real secret sauce is then around the offline piece, and we're the only people with an offline database. So what gets talked about with brands when people talk over, dinner with friends, at the water cooler at work, or home with their spouse or with their children. This is something that we've been doing now for 10 years, and nobody else can create the type of database that we've created. Every week out of the year, we use online surveys to interview a cross-section of people, and we ask them to tell us about the conversations they had yesterday about products, services, and brands. And what we've learned is that the social media is kind of like the tip of an iceberg. It's what's visible, it's big, it's imposing, but beneath the surface are all these other conversations. And when we've used our advanced analytics to try to help our clients to understand the impact, what we've learned is that social media and word of mouth each have about an equal impact in terms of future sales, and that impact is quite substantial. 20% and sometimes more of the sales impact of a brand's growth comes from these conversations that take place. So if a company does not have the offline piece and all they have is social media, then they are missing out on at least half the opportunity to take advantage of consumer conversation, and maybe they're even misleading themselves, because we've also learned that offline conversations bear no correlation to online conversations. There's different reasons that people talk offline than online, and we're the only people who have the entire spectrum.
Now, Ed, how would you describe Engagement Labs' overall business model? What's revenue growth like right now? We saw the Q3 number, and when do you expect to be break even?
So our revenue model is, first of all, a recurring revenue model. We're selling data licenses to our clients, and our goal is to be able to sign people up for 3-year recurring revenue types of subscriptions. We're not selling one-offs, and we're not just selling services. So we're trying to sell a 3-year recurring revenue model, which can begin to really multiply quite nicely. We also see the opportunity and are already beginning to experience some upsells. Once someone's begun working with us, 6 months, 9 months into an engagement, we see the opportunity to add to that through some upsells. So we're entering a hyper-growth phase now, and we think we'll start to be cash flow break even maybe at the end of 2018, early 2019. We are investing heavily now in sales, and the model for SaaS companies like ours is you need to be able to spend the money on salespeople to get those contracts, which then have a multi-year time period to them. And
lastly, Ed, the world is changing very quickly. As you know, technology is changing, the marketing landscape is changing. Where does Engagement Labs fit in there, and what does the world look like in terms of marketing in just a couple of years' time?
Yeah, so there's been some projections that have come out recently that say that the social analytics space is about $2.5 billion now and growing at about 30% a year. So we're excited to be part of a very fast-growing sector. We're investing not only in the Total Social platform that we've built out, We're investing in artificial intelligence and in machine learning in order to be able to iterate very quickly around our predictive analytics. So that's an exciting new investment area for us. Our clients, when they work with us, are giving us a lot of confidential data. And so we're also now beginning to explore blockchain as a way to help to ensure the safety of that from the client's point of view.
And you're saying all the key words: machine learning, AI, blockchain.
Well, I think they're all real in our particular case. I think these all do fit very well, and we're really excited about it. And I would say that we also now see this kind of the central role that consumer conversation plays in helping to drive business performance. And so we're also now exploring connections with a variety of other data sets that coming through our data and analytics platform can create something that's very powerful for our clients.
Most of the data that's ever been created has been created in the past 2 years. You need a system for analyzing and making sense out of that data, and that's what we do. Where we, I think, really shine is we're a turnkey solution. We have hardware products that we can put in place. We have telemetry that we can put in place. It's all cloud-based, and we do it all for you.
If you mention blockchain to an investor, their eyes might light up with excitement, but try explaining how it actually works and their eyes may start to glaze over. That's the riddle of blockchain. It takes an engineering whiz to understand its finer mechanics, which are evolving by the day. But thankfully for the layman, you only need one simple diagram to explain what makes blockchain so valuable. The diagram to the left represents the centralized internet environment we live in today. In this world, protocols such as HTTP for browsing and SMTP for emailing are the so-called thin layer because they can't be monetized much. Instead, the applications that run on them are monetized because that's where all the valuable user data is stored. Think of Google Chrome and Amazon.com as examples. Those applications are the so-called fat layer. But in the blockchain world, that value proposition is reversed for two key reasons. One, that valuable user data is shared across a decentralized network rather than in individual applications. And number two, these blockchain networks are backed by so-called protocol tokens. Think of these tokens as shares in the protocol. As new products and services are added to the protocol, it becomes more useful and the tokens rise in value. eXeblock technology understands this value reversal and is tapping into that trend with its latest agreement. The company designs decentralized apps, or DAPPS, for the blockchain. Recently, it agreed to create 4 DAPPS on the PeerPlace platform over the next 2 years in exchange for nearly 1 million protocol tokens. eXeblock founder Jonathan Baha'i explains what he's looking to accomplish with this deal. Jonathan, eXeblock Technology recently announced a deal whereby you're going to be developing decentralized apps, or DAPPS, on the PeerPlace platform, which you were one of the founders of, PeerPlace. So explain the significance of that and what that means and what kind of DAPPS you're going to be developing.
So with the holdings that we have now with PPY tokens, which is the core token of the PeerPlace blockchain, what that means is that all the transactions that run through that blockchain now, eXeblock is going to receive a share of those revenues that take place. So with the DAPPS that we're creating, we're essentially aligning, we've aligned our interests, which means that with the introduction of the 50/50 DApp, which we've just gone into testnet, launching that on the PeerPlace blockchain is going to allow us to have reoccurring revenues continuing to happen as every single ticket sold within the 50/50 DApp happens worldwide. So with the deal, what that means is that the DAPPS that we're going to create, same sort of thing. With every single DApp that goes on the PeerPlace blockchain, all the revenues that reoccur within those applications will continue to receive revenues back to eXeblock, and that happens worldwide.
Jonathan, as far as those tokens you're talking about, you got nearly 1 million of them in the PeerPlace deal. What's the significance of that? And tell us how the value has gone up almost exponentially in just a few weeks' time.
Right. So before we announced the deal, the PPY token, which is the core token of the PeerPlace blockchain, was approximately $5 US at the time. After the deal, within a couple of weeks' time, the token went up to about $18 to $20 in value. That's certainly a huge validation in terms of the cryptocurrency industry. The people who are in blockchain see the significance of this deal being massive because they understand that with us holding the PPY tokens and with the DAPPS that we're creating, it's going to mean reoccurring revenues for eXeblock, but it's also going to be reoccurring revenues for everybody who holds PPY tokens within the PurePlays blockchain. So immediately they recognize that this is going to be something that's going to be huge, and so it immediately just caused the price to go up by as much as 400%. But in terms of the applications, everything that we build on the PurePlays blockchain now, it means that we're going to get reoccurring revenues coming back to eXeblock. Yeah.
So the people in the blockchain world and the cryptocurrency world, they understand the value of those tokens, but then you've got the equity market that maybe doesn't get it, and is it still a situation where you need to educate investors as to what you have here?
Yeah, I know that the markets have been looking at the blockchain space for some time, but I don't think there's quite a clear understanding of what it is that eXeblock is doing because we are dealing in public blockchains that are decentralized. I don't think it's very clear to them how the revenues are generated. I think this deal, though, has really illustrated how revenues can be created because of the amount of tokens we hold, the percentage of revenues that come back to us. That's very clear to understand. I think that prior to that, the markets didn't understand it conceptually, and I think they still are. When it comes to blockchain, they see cryptocurrencies, and it's just the value of the token itself. They don't understand that that blockchain at the application level is the next generation, and that's where we're able to create huge value.
Update us, Jonathan, on the decentralized app or DApp for the 50-50 draws, and remind us how big a market that is globally. What are you doing there? You're testing this now, and you put out this white paper as well.
Right, so we released the white paper that described how 50-50 DApp works. That was put out publicly last year, and we released the testnet phase just this past week. So with that, what that means is that now we're actually going to go into a phase where we're getting feedback from people who would actually use the application.
So give us a real-world example. You've got a charity or an organization somewhere in the world, they do a 50-50 draw on a regular basis. Where do you fit in?
So 50-50 draws are very popular in sporting events. They're very popular for organizations which raise funds for Canadian Cancer Foundation and things like that. So they would actually be able to use our application, which works on smartphones, and be able to have it all completely done on the blockchain. So that versus using all kinds of papers and things like that, causing a lot of auditing issues. The blockchain makes it so that the selection of whoever wins in the draw is also completely fair. So these are all the benefits that the blockchain brings to the 50-50 draw, and that's what we deliver in the application we created. You
mentioned the first time we met about how you're developing apps or DApps for mass adoption. There's an example there. So Q2 revenue could be meaningful. You may start making meaningful revenue in the second quarter of this year. Update us on that. Are you on track for that?
So when we actually launch the 50-50 DApp, it's going to be supporting cryptocurrencies initially, right? So we all know that cryptocurrencies are generally difficult to get a hold of. People who are trying to get into Bitcoin or use other cryptocurrencies, it's difficult to work with. So when you have blockchain applications, that's how they live. That's where they operate. And unless you're a cryptocurrency enthusiast, you're not really going to have access to that space. So what we're doing then is we're introducing Freedom Ledger. So that's the next step that we're working on. And what that does is that creates an on-ramp and an off-ramp into digital currencies. So what that means is that someone who has a debit card or credit card would easily be able to use the DApps that we create, but also DApps that are created all throughout the industry, so that they have access to the tokenization that happens within blockchain applications, which we believe are going to be the next generation that everybody's going to be using on their smartphones and whatever devices.
Lastly, Jonathan, we're looking at your chart here. You guys burst out of the gate when blockchain was sort of hotter in the public consciousness. It still is, but things have tailed off here. Obviously, you want to be at a higher level. What's the market not getting about eXeblock?
I think that other blockchain companies have had a bit of an impact in terms of what's happening. I think that they don't quite understand the story that we have in regards to creating decentralized applications. Only recently we've started to introduce like the PurePlays deal. We just introduced the 50-50 DApp, but I think that there's I think there's some misconceptions about what blockchain is and how it can be applied and where it's going with the future. So I think the markets are somewhat unsure about where it's going to go, because our story about actually creating blockchains in different verticals to dominate those verticals is very different from other stories that are in the industry, which is generally a lot of mining stories and investment stories, not the same kind of thing where we're actually creating brand new blockchains and giving the investors the opportunity to get in at the ground level when they actually start.
Well, Pico the Beans is a lifestyle brand. I was fundamentally confused why there wasn't an apparel product that fostered a lifestyle of play for children. I want the world to look at the lifestyle of a child as something that needs to be preserved and protected. And we create an apparel product that makes them feel good. It allows them to get outside and become who they are. And that's what we want. We want to foster a playful life.
For many companies, we tell them that their data is like the Mona Lisa. It's incredibly valuable. Every large organization in the world right now has a 42% compounded annual growth in their data storage, and the old methods aren't going to work. Leonova's technology was built under the following assumption. All your investment in network technology and security technology and hardware, we assume it all fails, and the bad guys are going to get access to your data. With Leonovas, we're the last line of defense.
There are few things more frustrating than being misunderstood when you've got a bright idea, especially when there's money on the line. Jack Stock has been frustrated occasionally for the better part of 30 years. The CEO of Globex Mining brings a unique business model to the table that stood the test of time and produced some solid returns, and yet the market doesn't seem to understand its inherent value. Globex owns more than 160 properties teeming with a wide swath of minerals, from your basics like gold and silver to more exotic ones like feldspar and manganese. That's very much out of line with the traditional approach of focusing on just a few metals. The company waits for down cycles to buy up quality assets on the cheap, boosts their value with some development work, and then sells stakes in them when the market recovers, and receives royalties and has various other income streams. Think of Globex like a house flipper that stays on board as the landlord after the sale. All of the properties Globex holds exhibit at least one of the following criteria. They're located in camps known for their productivity, they have historical resource estimates, they have drill intersections of economic interest, or they have produced in the past. Globex also operates in politically safe jurisdictions, has zero debt, and has kept a tight share structure of just 50 million shares outstanding. Despite all of this, the market doesn't seem to understand Globex's value proposition. Stock previously told us that he believes Globex should be trading as high as $10 per share based on comparable companies. Yet they're currently trading at just a fraction of that figure. I recently caught up with Stock to find out about the latest deals and development work his team has done to help investors see the light. Jack, you've told us before that you like to buy low and sell high, and we're in an environment now where generally you've got metals prices rising. So where are we, do you think, in the cycle? Last time you said we were coming out of that awful cycle of several years. Where are we now, and where does Globex fit in?
I think we're in the up limb of the cycle. If you look at the metal prices, everything from precious metals, base metals, industrial minerals are rising. And that's basically what you need. If the metals prices don't rise, projects just won't fly. So I think we're definitely on the uptrend, and that is translating into a lot more interest in the market by investors and also by companies. Companies are able to raise money and go forward with projects.
You've got this mid-Tennessee royalty asset, and you tell me off air and tell me now that you're pulling in about $160,000 a month from that. Now, how confident are you that zinc prices are going to stay at nice levels?
All the indications are is that there's going to be a shortage in zinc. It's a widely used metal, it's important. There is some zinc coming online, but not enough to meet demand. And actually, this is true of a whole bunch of things. Also, the $160,000 that we got in the last payment, they still haven't reached full production capability. That is intended, well, They intend to go to full production, so I'm expecting it to go to at least 200,000 a month, as well as the zinc price, because it's going up. The price for our royalty is based on the zinc price and the amount of zinc produced. The last payment was based on a zinc price of below $1.50. I think it was $1.46 a pound. Right today, it's $1.56. So, you know, I expect every time, depending on what the Canadian dollar does, that we intend to expect to get higher royalty payments.
Globex has about $4 million in cash. You have no debt, as you like to point out. So describe the various income streams that you have on the go. You touched on one there.
Yeah, we have over $4 million in cash and stock, and the income streams are from option deals that we did. Like yesterday, Renforth, which have our Parbec property near Malartic, paid us the third year option payment, which was $125,000. And by the end of the month, they're going to be issuing us another 500,000 shares. So we have all kinds of deals, existing ones and new ones we're negotiating at the moment. We're expecting another one this week, which will, if it occurs, is going to be a major cash infusion for the company.
So you've got roughly 162 property interests right across the board, which you've just described before, base metals, precious, and specialty metals, and so on. But you're still, you say you're in this conundrum where the market looks at it and they kind of go, I can't do the research on that. I don't get it. So how do you get out of that dilemma?
I think it's just basically I have to put the effort into more exposure and explain, simplify and explain. You know, it shouldn't matter to people what the product is as long as it has the potential to make money. Because that's at the end of the story is what it's all about. If you have a deposit of something, if you hit it in the right time, you may have to wait 5 years, whatever, increase the value of the project by doing work that makes the value evident, and eventually you're going to do a deal on it.
One property you're very excited about is this silver property in Germany you talked about last time. What kind of progress are you making there?
Yeah, that's a really interesting project. We picked up 164 square kilometers of ground, a single package, 35 kilometers long by 5 kilometers wide, including 5 silver mining camps. When I say silver, it's silver, zinc, lead, and a couple other things. It's historical mining camps with huge potential, never been worked in a modern method. No modern geophysical surveys, no modern geology. It was all pick and shovel.
And lastly here, Jack, I'm going to wind you up a little bit. There's your stock, bit of a spike lately. Mm-hmm. You've said before that at this level, you're wildly undervalued. You potentially could be trading at what, $10 if the market's understood your story better?
Absolutely. You know, if you look at comparables, if you took one property, if you just took our royalty, we're trading at maybe a little bit under the fair value of just that royalty. If we had nothing else, right? So 162 properties were being valued on a royalty on one. I mean, all the rest is like free for as far as investors are concerned. And it's not being recognized, partially because of the complexity and the number. And but I think, you know, I look at it all as money-generating projects. I don't care if it's gold, I don't care if it's zinc, I don't care if it's feldspar or vanadium, lithium, it doesn't matter. The end product is the money, and I have to get investors to understand that.
So we have a tagline, and that's like the Desert Line Energy is the next producing lithium mine in the world. Not only at Desert Line Energy, we're ready to meet the demand of the lithium market today by coming into production now. We're also looking out into the future, and we see a bright opportunity for us to be a long-term producer producing lithium chemicals for the growing lithium market today and then into the future.
From the heart of the financial district in downtown Toronto, that's our show for this week. I'm Mark Bunting. Be sure to subscribe to our YouTube channel so you don't miss an episode. And for more great investment ideas through our weekly digest and morning note, subscribe to capitalideasresearch.com. Thanks a lot for watching, and thanks for investing like a pro. We'll see you next time.